why are gold prices crashing? Over time, gold has underperformed in the US stock market. However, in times of uncertainty, this yellow metal has a reputation for being a safe haven asset. Many people have even described gold as an inflation hedge. It should be an excellent time to invest in the metal. Because gold is a physical investment that can serve as a store of value, it has historically rallied when inflation is high. It's also a popular choice during geopolitical uncertainty because it is considered a haven. However, the bad news is gold prices have not risen. They are crashing. Gold passed $2,000 per ounce for the first time in history in 2020 and reached an all-time high of $2,074.6 per ounce in March 2022, confirming the inflation hedge story. However, gold has lost 18% of its value in the last 4 months since that high, implying that gold is nearly in a bear market at a time when it should be holding its value. As a result, gold appears to be failing as an inflation hedge. So what caused this massive drop in prices? Instead of a reliable asset, it is stuck in the mud. When will gold shine again? We'll answer all your questions, but before moving forward, if you haven't subscribed to our channel, subscribe to it. And don't forget to press the bell icon. Why is gold falling? Gold is still facing an unusual mix of rising and low. Even as inflation in the United States approaches double digits, gold appears to be stuck in the mud. Rising interest rates and a rising US dollar are to blame for gold's recent downtrend. What should we understand about these trends as the gold prices approach $1,680 support level? Is it the right time to buy or sell? So stay tuned, because we will tell you instead you could buy gold instead of its enormous fall. Moving on with why interest rates are high. As we all know, gold does not pay interest. It is constantly in competition with interest-bearing assets such as bonds. The Fed has purposefully raised interest rates unexpectedly in recent months. While creditors adore high interest rates, debtors despise them. The United States government is the world's largest debtor, with over $30 trillion. If interest rates rise too high, the government will be forced to divert all its tax revenue to interest payments. As a result, the Fed cannot allow interest rates to rise too far. Talking about the rising dollar, which is also a significant cause in suppressing gold, across all major exchanges, gold is priced in US dollars. When the dollar rises against foreign currencies, gold gets more expensive for foreign investors. As a haven asset, the dollar competes with gold. When exiting risk assets, most investors opt for bonds, gold, or cash. But this year, the majority of people have chosen cash. However, this dynamic is unsustainable for two reasons. Number one, inflation. Cash is losing purchasing power at an unprecedented rate, limiting the time investors are willing to hold cash. Individual and institutional investors alike are looking for ways to reinvest their money. If the economy enters a recession or inflation remains high, stocks and bonds look pretty dismal. Number two, no one likes a rising dollar. A rising dollar is good for the US economy in many ways. For example, it gives them the upper hand in power against international goods. But threats of rising gold overpower its benefits. Like the rising dollar reduces multinational corporations' revenue. When they receive foreign currencies from other countries, they must convert them to dollars at a lower rate. Not only that, but a stronger dollar also hurts emerging market economies. Many commodities, including copper, oil, gold, and others, are priced in US dollars. A rising dollar raises the price of commodities in emerging markets, worsening inflation and putting pressure on economic output. Emerging market economies have dollar-denominated debt as well. When the value of the dollar rises, the cost of servicing their debt rises. So, the rising dollar has a destabilizing effect all over the world. So is it a good time to buy gold? Instead of its rising prices, the answer is yes. Gold investing may be frustrating to new investors. Isn't gold meant to be a hedge against economic disasters? Isn't this the ideal environment for gold to soar? Yes, for sure it is, but investors must face the tough reality as they have in the past. Downtrends are long and tedious, whereas uptrends are brief and explosive. When it comes to gold investing, you have to practice patience. During bear markets, most investors ignore all entry points and rush to buy as much gold as possible during bull market peaks. This throws the most important investing rule, buy low, sell high, out of the window. Gold investing may require an uncomfortable amount of patience, but when things go your way, they go your way quickly. You have the opportunity to board the rocket right now. It's better to board now than at the peak of its flight path when everyone else will be vying for a seat. That's when you can calmly exit, collect your profits, and continue. You guys tell us your views regarding the massive fall of gold. And are you a gold investor?